Hi traders, so in this video I'm going to show you how you can use a simple top-down analysis to catch a trade like this, and I'm going to show you the three different entry models on three different time frames that you can also use to catch a trade like this. Okay, let's dive right into it. So the first thing that you want to do first is that you want to drop down to weekly time frame. Okay, as you all know, for those that have been following me, we've been calling out this move even before it all started, right? We expected price to give us a pullback from here. Give us a reaction from there, then we can start getting those pullbacks from here. Okay, so this is your top-down analysis. You want to know where is price coming from and what is price printing after it came from where it's coming from. All right, so I'm not trying to complicate things for you, okay? Just trying to keep it as simple as I can. So just make sure you write down a lot of information. So when price came from here, what did price do? You can see that just looking at the weekly candle alone, you can see that we've been having that break. This is all break. Someone actually said I should make a video explaining these candles again. So you can see all these things are all break. If you go down on lower time frame, it's a break of structure that you will be seeing. All right, so when you see a break of structure, what will price do next? We're gonna go up higher. All these are all break of structures on lower time frame. When you look at them on lower time frame, they are all break of structures. Then we get to this part. It's been breaking highs, respecting the lows, respecting the fair value gap, respecting the order block. Okay, let me delete all this again because they were not really okay. This one was clean, so I'm not gonna delete, but you get my point, right? So just looking at these candles alone, you can tell that price is going high. So I know a lot of traders were looking at these levels that we're gonna reverse from it, but no, we're not gonna reverse from it. Even if we will excuse me, even if we will even if we're gonna reverse from it, right? So we expect to get those candles going down lower again, telling us that we breaking lows and respecting highs, right? Okay, so to get to that chart that I showed you just now, so knowing that we are bullish based on where price is coming from and we're breaking this highs, right? Also, this is a major high. We're breaking this high also because of course you wouldn't ignore this even if you're looking at this. All right, this is a big move here. This is weekly candles. You're trying to catch the next expansion. All right, that's what you're trying to do. So having that in mind, this is a simple way for you to get this top-down analysis because I'm doing top-down analysis and I'm also teaching you how you can do it on your own, right? That's great. That's a win-win for you. So you drop down to 4 hour. So let's look at that's one that I posted, the one that I showed you. Of course, it's a trade that we took. All right, not showing you based on the trade that I didn't took. We took the trade from here. I missed out that move from here, right? I missed it out because I sold down into it. Then I went to sleep. When I woke up in the morning, price was already here, so I took the continuation trade. So it still doesn't matter. Took the continuation trade from here, which I shared in my free Telegram group. Free Telegram group. All right. Reason why I'm okay. Let me not get into that. Okay, so here now, before price created this, let's get serious now. Before price created this, you can see that we had that break also. If you go down on weekly and look at it the way I was marking it out, you can see also that we had a break on the weekly and we have a break on the 4 hour. Remember my time frame alignment video, you align weekly and 4 hour. What weekly is giving you, if 4 hour is giving you that same information, then we are still strongly bullish because you want to trade with the high time frame direction. Okay, so what you want to do next is that, okay, we broke this high. What did price do before we broke the high? We swept liquidity. So that's making this a low and a high. All right, a low and a high. So in between, below this 50%, to here, you want to find those other block. You want to find those fair value gap. All right. So this is the other block here that's price. If price disrespect this, then nothing else. Okay, let me delete this. So let's drop down to lower time frame. So let me show you how you can catch this on lower time frame. All right. So when you drop down to lower time frame, let's use 5 minutes first because we want to catch that sniper entry. But trust me, I really don't really care about sniper entry. I can catch continuation. As long as I can catch continuation trade, right? If I miss the sniper entry, it's cool, it's fine. All right, that's even give me more confirmation. I will show you 3 types of entry that you will use for this trade. All right, I didn't prepare this that I'm going to give you 3, but I'm going to give you 3 types of entry that you will use for this. I should have said this in the beginning of the video, but yeah. Okay. So now I'm going to show you 3 types of entry that you will use for this trade. 3 types of entry that you can use on different time frames. All right. So now, first, this is 5 minutes. Okay, this is 5 minutes. Then see when price reacted here, right? We had that inversion. So this is your number 1 entry. This is already your entry. We had that inversion and we have a new fair value gap. So knowing that this is New York section, when there was volatility, New York section, and they already show you this, you can actually trust this and take this trade. Remember, this is not a financial advice, all right? It's just for educational purpose. You can use your demo account to trade it. So this is going to be your first entry. Guess how much you're risking? You're risking 80 pips for, let's see how many pips this is. Okay, went up here, but price still went up higher, but we can just take this. So you're risking 80 pips to make 200 pips. All right. If you go down on lower time frame, also you can get entry, but let's not get into that. All right, let's not get into that. Let me show you the 15 minutes entry also. So here we have a 15 minutes entry here. What can we see here? We can see that price broke above this candle, broke above this candle, and actually created another candle here. All right, so this is another entry here. Then we have a fair value gap, which is confirming that price is ready to go higher. So this is going to be your entry from here. So this is another entry. And where is your stop loss going to be? Okay, your stop loss should always be below that bearish candle, right? So you'll be targeting this high here. All right, so you'll be targeting this high. All right, so for my trade, I don't care about the risk to the reward. What I care is the quality entry. All right, that's what I care for. Because if I want to take a trade here, I'm gonna do that, but you might get stopped out like a couple of times. All right, then if you want to do the 4-hour entry, this is gonna be your 4-hour entry. 4-hour entry is gonna be this. It's gonna be the 4-hour entry. All right, you're just gonna take this entry because of course you've waited for days for this. So if this goes wrong, you want to turn the charts the other way. Sorry, you want to go back to your drawing board and see what you did wrong. Then knowing that we're bearish, then you want to trade the other side. So this is another entry. Let me show you another entry again. There's many entries. Then if you go on 4-hour candle, there's this guy that actually took this entry. He took this entry. You go on 4-hour and seeing this and seeing that we've closed above this candle, right? This is going to be your 4-hour candle entry. You can just take the trade from here. And again, I will show you one other thing that you can see. You can see that we also disrespected this. So you can take the trade from here and target whatever you want to target. All right. Target whatever you want to target up here. But just know that this one, the risk to reward wouldn't be that great. But as long as you see 1-to-1, that is it. It's a quality trade. You understand? It's a very quality trade. But if you want to trade this, it's way better that you trade it from here. All right, and you get this entry. All right, okay, because we've already swept liquidity here, and price swept liquidity here also. But we're working with this. We're working with this level here. Okay, so I hope you guys get this. So again, let's drop down. Let's go to what is price likely going to do next week, because this video is also about the next move. All right. So now let's do this. So it's simple. It's really, really simple. We had this displacements to the upside. All right. Disrespecting those bearish fair value gaps, other blocks, with disrespecting them. So all you just have to do, the same thing that happened here, the same thing that has been happening. You just draw your fib again. Boom. Guess what? What's below 50%? Again, we can draw from here to here. So this time around, we have to refine this on 15 minutes. All right, we refine it on 15 minutes, then we'll go with the 15-minute order flow. We trade back to the highs. All right, so this is actually my top-down analysis for getting into next week. So this is what I want to look for. You can see these levels are not random. You can see how price already reacts to this 25%. Give it a nice solid reaction. Let me show you again. They're not random levels. Like if you trading the dealing range, if you trade dealing range, right? This is the fib settings that you can use, all right? But this is also dealing range, because we broke above the high pullback, and that is it. You understand? I don't do by names. By names, it doesn't matter to me. Okay, I don't do by name. So I want to draw. Reason why I'm drawing my stuff from here to here is because of this last candle, this last bearish candle, right? That's why I just want to draw it out there. And we have fair value gap here, which means this levels here are high probability levels. All right. So remember, high probability level doesn't mean that it must hold. But again, remember, I'm not a financial advisor. Everything that I've said in this video is just for educational purpose only. If you must trade it, consult your financial advisor. And if your financial advisor want to trade it with you, you guys should use a demo account. All right. Yeah, that was a joke actually, but I'm not a financial advisor. All right. Don't get it twisted. All right, guys. Enjoy the rest of your week until we speak again. Bye for now.